All right, so let's finally address the elephant in the room. I wanted to get this message out because there's been all this talk about the Feds increasing the federal funds rate, and I wanted to set the record straight. And so I would ask the question to you, which do you think impacts 30-year fixed mortgage rates? The Feds or inflation? What would you say? Well, you might think that it's the Feds because the federal funds rate is what we've been hearing in the news, and at the same time, mortgage rates have been going up, but it's actually not the case. The thing that drives 30-year fixed mortgage rates is inflation. Let me show you these little charts here for you. So people ask me, when do I think the interest rates are going to come down? And I always am going to look at this chart here, which is the inflation chart. If we look at history and time, you will see that the interest rates have always followed inflation. So that's really the metric that mortgage advisors look at. And I know this may be a little tough to see on your screen, but this is a year-over-year analysis. And the reason why we saw interest rates jump so much in the start of August is because if we look at this August CPI, which is the Consumer Price Index, it was at 0.2%. Well, when we look at a year-over-year analysis, this August metric drops off, and instead we gained this one, which was 0.6. So now that jumped us to a 6.3% CPI inflation, which is why interest rates went up, is because the CPI number went up and the fixed rates always follow alongside with it. Now, if we look at over the history and time, like why did it feel like this year they just went absolutely bananas? Well, I want to point this out to you. So here's the inflation and the mortgage rates. You can see that the rates follow inflation, and this bottom line here is the actual inflation rate. And you can see that in January of 2021 is when we see inflation go up. Now, this is when interest rates should have also been going up, and then it would have been increasing in bite-sized chunks versus this drastic chunk. But unfortunately, the Feds during this period here, they locked in mortgage rates to keep mortgage rates low. And so this QE period is what we call it, is when mortgage rates were locked low. Had they been following the inflation line, they would have been going up. But what we see right here, when they released it, which was January of this year, look what happened to interest rates. They followed inflation. So when do I think the mortgage rates are going to come down? Well, I actually think that we're going to start to see the inflation report year over year get better because of these numbers here. I think we'll start to see that in the next couple of months. We'll know in the next few weeks when the CPI numbers get reported. But there's been a lot of talk that the mortgage rates could get back to the 5% range in Q1 of next year. The problem is there's always that black swan effect. So the black swan is that curveball that we weren't expecting. At the beginning of this year, we weren't expecting the Russia and Ukraine stuff. And there's always a black swan event that could take place. But bearing that that doesn't happen, then we should start to see these numbers come down. And when we start to see inflation come down, 100%, you can mark my word, is when we see interest rates come down. And just know, for all of our Nerd Club clients, we offer a zero out-of-pocket cost refinance. If you're in the mortgage for already a year, don't worry. We can refinance you to a 29-year term. But we're always going to run the math to make sure it makes sense. Because some people think it takes a full percentage point. That's kind of a myth. It really depends on your loan size. So every single client, we will run a rate refi analysis first before we pull your credit to make sure it makes sense. So just know, even if we've transferred your loan to another lender, we still offer the in-house refinance for you. We have all your documents on file, but we don't want to pull the trigger too quick. So stay tuned. If you have concerns about the housing market, please reach out. If you're curious what the current value of your home is, please reach out. We are here to be your resource. As always, thank you, and I hope to see you soon.